Can you really upgrade to your next home with a limited down payment? Today, we're digging into all of your options, and you might be surprised. Let's go. Hey there, I'm Bryn with Hearthstone Real Estate here in Eugene, Oregon. On this channel, I coach you through the real estate process and have some fun along the way. If you've been living in Eugene for a few years now, maybe in your first home or a cozy starter house, you might be starting to feel that itch. Maybe the kids are growing, your work from home setup has outgrown the kitchen counter, or your weekends are filled with daydreams about a bigger backyard, more natural light, or finally landing in that forever feeling neighborhood. But then that little voice creeps in. We don't have 20% saved. Can we even do this? I hear this all the time. And today we're going to unpack it because the idea that you must have 20% down to upgrade, that's outdated. Let's walk through what's actually possible and how you might be closer to that next home than you think. All right, let's start with the myth that you need a full 20% down to buy your next home. This idea is baked into a lot of conversations around money and real estate. Maybe your parents told you that it's the smart way to buy, or you've heard that it's the only way to avoid private mortgage insurance or PMI. And hey, putting 20% down can be great if you have it. But here's the truth. Most people don't, especially not in markets like Eugene, where a modest upgrade might mean jumping from $400,000 to a $575,000 home or more. And lenders know this. So they've created programs to support buyers who have solid financial footing, but less in the savings account. Conventional loans often allow as little as 5% down, even for current homeowners. Some buyers might even qualify for 3% down if they haven't owned a home in the past 3 years. Then there's FHA loans, which require 3.5% down, and VA loans, which are 0% down for eligible veterans or active duty service members. So no, 20% down is not the rule. It's just one option. And for a lot of upgraders in Eugene, it's not the most realistic one. So if you don't need to save 20%, where does your down payment come from? The answer might be sitting in your current home. Let's talk about equity. Equity is simply the difference between what your home is worth and what you still owe on your mortgage. If you bought your home even just 3 to 5 years ago, chances are you've gained equity through your monthly payments, sure, but also from home values increasing in Eugene over the past few years. Let's say you bought a home for $375,000 and now it's worth $500,000. If you paid down your mortgage to around $330,000, you could be looking at $150,000 in equity. That's significant. And that equity can become your next down payment. Here are 3 common ways people in your shoes put it to work. Number 1, sell first, then buy. You list your home, sell it, and use the proceeds to buy your next one. This route gives you financial clarity, but you might need temporary housing in between. Number 2, buy and sell simultaneously. This is super common. You list your current home while shopping for your next one. You work with the lender and your agent to align timelines and potentially close both homes within days of each other. And number 3, bridge loan or a HELOC. If the right home comes along before you've sold, a bridge loan or a home equity line of credit or a HELOC can help you tap into the equity in advance. This gives you flexibility but comes with short-term debt. So it's something to explore carefully. Each option has trade-offs, and which one makes the most sense depends on your equity, your financial comfort zone, and how competitive the current market is. Before making any big decisions, it helps to zoom out a bit and look at the big picture. Here are 4 key questions to ask. 1, how much equity do you actually have? You don't need to have a formal appraisal to get started. A market analysis from a local agent can give you a strong estimate of what your home might sell for today. Number 2, what would a new mortgage look like with a 5 or 10% down payment? A lender can help you model monthly payments so you can see how an upgrade would fit your budget. Not just the sales price, but the full picture: principal, interest, taxes, and insurance. Number 3, what would make the move worth it? What's the emotional why? More space for the kids? Better layout? Easier commute? Knowing what you're moving towards helps guide smart decisions. And number 4, do you need to sell first, or could you buy first and then sell? This comes down to your risk tolerance and finances. In some cases, buying first gives you peace of mind. In others, selling first gives you leverage. And remember, sometimes the process leads to, yes, let's do this. Other times it's, okay, not quite yet. But now we know what we're aiming for. Upgrading your home isn't just a financial decision, it's a lifestyle one. And it's totally normal to feel nervous when you're not sure where to start. But I promise you this, you don't need to wait until you've saved 20%. You don't need to have it all figured out before asking questions, and you definitely don't need to go it alone. Whether you're thinking of upgrading this year or just want to get your ducks in a row for the future, taking a little time to understand your equity and your options can open doors, literally and figuratively. Your next home might be closer than you think. I really appreciate you watching. If you found this helpful, please make sure to like this video. You can also ask questions by emailing, texting, or leaving a comment down below. I work hard to stay connected. Don't forget to hit that subscribe button and join me for my next video. Thanks so much for watching.